You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
Welcome back to TWIFO, This Week in Futures Options, a program here on the old Options Insider Radio Network where we break down, as the name implies, the week that was, and in this case still is, in the world of all things futures options. So we're talking your crude, your gold, your corns, maybe your lean hogs, maybe your fluid milk, whatever's catching our eye this week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And that little bit of noise in the background, that should remind you, I sound a little bit different this week. It's because I'm coming to you not from the scenic and sunny Options Insider studios over there in Chicago. No, but from the equally, perhaps if not more sunny, outside of LA for the Risk Management Conference, actually. So I'm outside getting a little bit of the ambiance. We're also getting a little bit of the ambient noise as a result. So if you hear some birds, some trucks, some smashing and banging around behind me, that's what's going on. It's all the hubbub of the conference. A lot of interesting stuff. This is more probably aimed toward our volatility views program. So if you're interested in this, I encourage you, again, check out we're going to have a full rundown of this conference coming up on volatility views. So you can check it out there. But in the meantime, of course, you're here to talk all things TWIFO. And if you want to check out our archives, we have a lot of great archives there as well. easiest place to find them, of course, theoptionsinsider.com, or go to iTunes, search for Options Insider Radio Network, and download until your heart's content. You can always grab us by the app as well. However you listen, unfortunately, no live stream this week. I apologize. Like I said, we're a little bit in a different locale, so the connectivity is not up to maintaining a live stream. We'll be back at it soon, don't worry. But in the meantime, you can, of course, always get us via podcast and hit us up via your questions on Twitter, on Facebook, or, of course, via the old-fashioned way, email questions@theoptionsinsider.com. I do mean it, we do love to hear from you guys. All right, and joining me on the old program, as always, nobody in the CME hot seat this week, but we do have my cohort, my partner in crime, the founder of all things Quick Strike, Mr. Nick Howard. Nick, welcome back to TWIFO, sir. I'm beaming in from parts unknown. Usually this is your job. So where are you beaming in from this week?
You sound like you're in a parking lot somewhere, to be honest with you. So I'm not buying that.
Yes, I'm in a parking lot in a Walmart in Downers Grove, Illinois.
No, I'm beaming in from the home office, and we could probably spend most of our time on Crude today. I'm sure everybody's interested in hearing about what's going on there, since that was the biggest move we've seen in a long, long time here. So we were waiting for this.
Yeah, you're right. This has been kind of the move we've been waiting for. We've been, I guess, anticipating / dreading, I guess, depending on which side of the skew you're lining up on. But people have been writing in for how long, Nick? At least a couple of months, asking us, hey, what's going on with Crude, not just with the underlying, but really with the vol. What's it going to take to really budge this vol out of the kind of doldrums it's been sitting in? I don't care how you measure it. Things like OIV, which is, of course, the WTI VIX that has been in the 20s, low 20s for some time now, after breaking through the supposed floor everyone thought it had last year of about mid to high 30s. So we're well south of that. Just looking at straight up implied coming out of the WTI options or other products out there, you get to see vol across the board has been in the doldrums. And we've been trying to figure out for a while, what would it take to really budget, move it? And we've kind of all come down on the same consensus that it's going to take a pretty sharp, aggressive move in either direction, but preferably to the downside. That's been where the bias has been in terms of volatility skew. The puts, near-term calls had a bit of a bid too. So if we gapped up hard, you would see a little bit of a pop there, but not as much to the downside. And then fast forward, of course, to this week, and that is exactly what we're seeing. We're finally seeing the much-awaited / dreaded sell-off here in Crude. Finally, we've kind of been locked in that range for seemingly forever. It's only been a few months, but it does seem like it's been longer than that. And so as a result, we've kind of been waiting and watching all the volume on the 50 puts and the double calls. Well, no longer. This was the week that we broke through it to the downside. The future's off about 9% or so coming into the show today. So an aggressive sell-off, shy of the 50 handle, pretty much almost across the board out here, depending on where you're looking on the term structure, but an aggressive downside move. And finally, as a result, a little bit of a pop out here in all things vol, with at the money vol up aggressively across the board, 5 points, 6 points, 8 points, getting close to the front month out there. So we're seeing vol finally come roaring back to life. This is kind of the moment that premium buyers, I think, have been waiting for, which is, I think, interesting in and of itself. And if you're wondering, hey, what is, and I should preface this, by the way, I'll have Nick come in with any clarifications if we need them. But of course, I mentioned we are doing this remotely today, so I did have to pull some of these screenshots from a little bit earlier in the morning where the connectivity was a little bit better as opposed to where I am now. So if there is some last minute volume, I'm going to miss it here. So I'll have to rely on Nick to fill in the gaps for me there. But as of earlier this morning, it was surprisingly, Nick, you'd think it might be a little bit more front month heavy this week than it actually turned out to be. In most given weeks, you're looking at WTI, we're seeing north of 40% in the front month anyway. And this week, that's exactly what we saw, about 42% in the front month. With such an aggressive near-term move, you'd think you might see a little bit of a more, maybe 50, 60, 70% trying to capture that bang, get some gamma in the front week there, or front month. But not really, only about 42%, with about 25% coming in 1 month out and kind of trailing off from there. And if you're asking yourself, well, what's happening with those aforementioned 50 puts? Those have been kind of battling for volume leader back and forth with the double calls for some time. The 50 puts winning the charge by a landslide this week. Not as much double call love this week as you probably could guess, with about 54,000 contracts going up out there in all things 50 puts. Again, the front month out there. So that's a pretty aggressive chunk, including the lion's share of those on Wednesday, with nearly half, about 28, nearly 29,000 going up on Wednesday. So a lot of paper going up out there on the 50 puts, followed hot on the heels by the 48 puts, with about 46,000 of those bad boys coming in. They're just cleaning up some of the conference behind me here, listeners. So that's what you're hearing in the background. And the birds are back too. There we go. Beautiful ambient audio here. And then, of course, coming in at number 3, we have a little bit of a tie actually here. So you can kind of pick your poison if you want to look at the 1 month out. So the May 50 puts doing about 32, nearly 33,000. Also about nearly 31,000 of the front month 51 puts, or if you want to go a little bit more, the double call still having a little bit of life in them today. Maybe actually not a lot of closing activity, which is kind of surprising. You might expect a lot of closing activity. But we saw about 35,000 of the double call. So kind of a close three-way, close to a tie out there for number 3, with about, again, 35,000 of the double calls, taking it by a nose, including 16,000 on Thursday, with nearly 12,000 of that opening, which is, I think, kind of surprising. Nick, does that surprise you? We see so much opening here this week on the double calls, and also amidst all that activity I was talking about. Did I miss any late breaking developments over there?
No, does it surprise me? I mean, I don't think. I think what happens is people still have like a bias of market direction overall, right? So this break might be a short-lived thing in some people's minds. So you might see why some of those people are getting in there. It also could be people rolling, right? It could be that if we take a look, well, that's not necessarily going to be the case for the April, but. No, I mean, it could have been, it could be any number of things. It could be the risk reversal taking place where people are getting out of some juicy stuff that they had on the downside and then getting into the even cheaper calls. Because if you look at, in particular in the April, the 25 Delta calls got much cheaper to the at the money over the course of the week. So it almost doubled in percent cheapness. So any number of things there. A lot of times, I would look at it a lot of times saying they got some bang for the 50 puts they've been sitting on for such a long time, and they decided, you know what, in case there's some sort of whipsaw, we'll go back and maybe get an opportunity to get some of these upside calls. But the 55s seem at this point a little bit of a distant memory. So, but again, you never know with this. If we got another move back up to this $5, and again, when you think about it, it's $5, it's 9%. Does it feel like a lot? It feels like a lot, but we've been sitting in this range for so long that it just feels about right from a move standpoint. We've always said, right? You said that you get a 2.5% move, you got to follow it up with another 2.5% move in the same direction. And we saw that happen throughout the course of the week, right? And any time, and if you look at this morning, when you were in conference, when the market paused a little bit, volatility came in. Okay, just sort of like what we've expected and what we've seen over the last several months. So, and then the market broke, and we saw a little bit of a bid come back in. So it's behaving like you sort of expect now. The thing that we talked about, and I was tweeting with somebody out there earlier in the week, how we got the break and people kind of jumped on it a little bit and got their vol because we moved outside of that 2.5% move. I think we traded down below 52 or something at some point, and then people started to jump in. And I thought that, well, boy, if we go back up to where we were, we're going to really see a problem with volatility. So I think that, right now, the only way vol is going to continue to go up is if we keep going south. But I really don't expect that we're going to keep going south. And I think that when I look at the open interest, to start to look at where some of the maximum OI levels are, I'm going to take a look at the April here first. And we see that, we have some good resistance again at the, outside of that 50 put, which was the big player for such a long time. We have the 48 put comes next, and the 47, and then the 45. So I think those are going to be our levels at this point going forward on the downside. If we start to touch or breach 48, we're going to see another bid. And then from there, if we start to, then if we move around in there, we might see come off a little bit, but then 47 and then down to 45. So now, again, and it's interesting. I saw some comments out there to some people I respect that are crude traders, and they were talking about how this is not trading off the fundamentals anymore. This is trading as basically as from on the technicals when you start looking at what we went through and the levels that we went through. So that 50 strike that we've been talking about for months. you breach that and people really got interested in volatility again. So I think we're going to have to, we may have some new levels set. We still have, I'll have to take a look at the May contract and see what it looks like there in terms of our bounds. So the May contract still 50. That's got, again, 48 strike is the next best thing. 55 strike is still that upside barrier. So if we hang around, I think that if we hang around here, and I think vol will come in pretty quickly. Like a lot of that vol that's in the April contract, if you look at how theta has progressed over the week, there's really not that much of an increase in the volatility. It's probably it's probably less than the May. And that's what I was paying attention to early in the week. I was seeing how much vol was up versus what theta was. And when you looked at theta versus the volatility increase, you started to see that the April contract really wasn't up that much. So, or not as much as the difference indicated when you looked at the vol term structure, because there was so much decay in there to keep the price the same. So what would I say looking at all this? I looking at the quick skew numbers, we looked at our skew, right? Skew got a little bit more negative, obviously, as you would expect, but not tremendous amount. Maybe the 25 delta got maybe across the board, if we average it out, about one vol more oriented toward the put. So the put a little bit more expensive than the call from a volatility standpoint. As far as the quick skew goes, right? And again, that's the measure of the rich or cheapness from the of the put or the call to the at the money. Those levels really didn't change all that much, except in the front month, and that just happens when that vol curve starts to contract towards this less than 7 days to expiration. But that the whole balance of call richness to cheapness versus put richness to cheapness to the at the money, that didn't change all that much. So those levels, so the shape of the curve, basically that means the shape of the curve has stayed pretty similar. So my expectation, and not, again, just being an observer, if we go through that 48 mark, we're going to see a bigger vol. If 48 turns into 49 or even 50, we're going to see people start pummeling the vol again, because we're going to be sitting at a strike with a lot of open interest, especially if we move into the April expiration and we're sitting around that 50 strike as the at the money. And let me just take a look real quick here and see if we can see what the max pain, do I have it in here? The max pain strike in the.
And while you're looking at that, I think it's worth, I'll have to dig in myself, because I'm kind of curious what was going on with those 55, those double calls. So many of those opening this week. This is not exactly the week, like you said, Nick. It's kind of a forgotten, distant memory. So it is surprising to see so many people opening on that strike this week. Maybe that is some of the crude bulls kind of peeking their heads up and saying, you know what, this sell-off a bit overdone out here. So I think that's worth digging into as well. And you mentioned the skew. Some people may be surprised why that kind of came in, but that's really what you would expect in a move like this. How long we've been saying out here on this program that these puts had a bid, and apparently all of LA is now burning down, listeners. So I apologize for all the sirens out here today. Again, the ambient noise of a big metropolitan area bleeding over here for us. But hopefully the hotel is not burning down, in which case I'll have to go. But in that sense, this is kind of what we would expect given the move we saw here. People have been paying up and paying up and paying up for these puts. Now when you move aggressively to that strike, or in this case blow through it in some instances, you're going to see people, that vol coming in. People are taking off those hedges they've been paying for. The hedges are working now. They're taking off. They're selling them. You see a lot of that vol come in aggressively. Now if we continue this move, or as Nick alluded to earlier this week when we paused briefly, you saw that vol come in. If we continue exploding to the downside, we will see that vol start to creep back up again, and maybe even start to increase. People start scrambling to get more strikes to the downside. But for now, this is kind of, I think, what we would expect, Nick. And what did you find digging through all that fun Max Payne stuff, Nick?
Yeah, well, it looks like the Max Payne is set up to be around the 52 strike. So again, that's all sort of Nostradamus type stuff. But I think we might see over the weekend when Globex opens, maybe if somebody wasn't around because they decided to take their break a little early and they missed the one big move in vol, that they try to push down futures a little bit more. I think that's pretty typical what we see after a weekend like this. We see somebody trying to follow through and trying to keep it going. But I would guess, again, pure conjecture, that we'll see some like maybe an initial push down, not too much, but then kind of a move back up again towards that 50 strike. And it's going to be really interesting to see what happens to volatility if we go up above that. I don't see what I would imagine we will see 50 handle again next week. And if we do, you're going to see vol come in. And if it comes in more than it got bid, then at that point, I think you really start to think about getting in the market. Like I always like to do, you get to the bottom of a range, you buy some puts, you buy some futures. or another thing too. People get cheap upside and they hedge them, and you get continued moves down. Again, that's the other way to look at those calls, Mark. Right? Is like we talked about how the calls are still very cheap to the at the money. That's cheap volatility, right? So a 25 delta call that's 10% poor to the at the money, and a 25 delta put that's 8% rich to the at the money. Those are the same Vega value. So if you want to buy cheap Vega, that's where you go. You buy the 25 delta call and hedge it, and if you get a continued down move, you get your premium paid for right away. So yeah, it'll be interesting. But looking at the volume for the week, openings not just in the 55 strike, which happen to be the most opening, but the 51 strike, the 52 strike, the 53 strike, the 54 strike. Net overall, you saw openings and higher open interest in all of those, and you saw closing open interest in most of the puts that you ran through, and you saw opening open interest in some of the puts below the kind of the 48 handle, so, or the 48 mark. So I think a lot of I would imagine just like you said, some repositioning for the bulls. There's a couple of ways you can reposition when you're a bull, right? You can buy puts and buy futures, or you can buy the cheap calls, but the call still got a little bit to them. So I don't know how if they're not hedged, I don't know how good that might be if we rally back up there.
Yeah, I wonder how all this is going to hang with Eric Norland, our friend from CME's supposition on the show last week that continued upside movement in crude would kick in all the U.S. producers, and that would in turn eventually weigh on crude again. Now this is our new regime, shy of the 50 handle for the foreseeable future. You don't see a lot of that U.S. production kicking in quite so much. So we'll have to next time we talk to Eric, we'll have to, if we are still in this range, that's a big if, of course. We'll have to see how that impacts his hypothesis there going forward. But yeah, Nick, it has been fascinating to watch crude. Everyone who's been writing in, I won't even bother to ask you if it covered the rent this week, Nick. I think we all know the answer to that. Crude's paying some rent out there in crude land. If you're long premium, underline's moving, balls up, you're probably paying your rent out there. So. Oh
yeah, for sure. Yeah, rent got paid. Again, it's one of those things though, right? If you're when you're scalping your gamma, if you're buying all the way down, you're not making any money, right? So you're paying your rent, but you got to be cautious about where your buy levels are, and get out on some bounces if you can do that. But definitely worth owning volatility. We even said it last week that it was really pretty cheap. It could come in still further, but when you start to get at those, I still think if we're going to see lower vol levels next week, but I like guessing. I don't know anything for certain, but I think we'll see lower vol next week, maybe after initial bid on Sunday night.
That's what the show's all about, right? It's guessing and reading the tea leaves. So educated, informed guessing. But yeah, it is kind of interesting. You're right. I unless we keep rocking and rolling like this next week, I do have a hard time seeing us maintaining these volatility levels, just because we've seen so far that crude, at least in the recent regime, wants to be lower from a vol perspective, like just about everything else on the planet right now. Whoever would have guessed, Nick, that the new Trump regime would herald in just an era of lower volatility across the board this week, notwithstanding in crude, of course, which is probably the opposite of what everyone expected, but we're seeing that in a lot of products. Again, this week is kind of the outlier for crude, and I'm kind of with you that I think if all things hold equal, if we hold these levels next week in terms of underlying, I would definitely guess or feel that our vol levels are going to be coming in commensurately. How about it, Mr. Nicky? Are you feeling a little gold buggy today? You got that in you?
Yeah, I think we take a look. Let me get my screen up here and see what we got.
Well, you get going. I'll dive right in, because even though I'm the remote guy, I'm ready to go, man. I got my data. I'm good. I'm ready to go because I'm playing with the quick strike. By the way, we'll get to that later if you've added the quick skew for the folks. But let's get into the gold. It was an active week out there as well. The futures off about roughly 2% or so, again, depending on where you're looking out there on the term structure out there. So it has been kind of interesting to watch again, kind of flirting with that 1,200 or so level. It's a level that's kind of been very important to the upside and to the downside in recent months, kind of testing it in both directions and testing it again now to the downside. We'll see if that 1,200 level can hold, or if the myriad legion gold bugs out there can drive it back north and maybe, who knows, flirt with the 12.5, maybe 1,300 levels out there again. And interesting paper out here this week. Decent overall. We didn't mention the open interest, the growth in WTI. So I'll go pull that up again in a little bit.
It's about out here. It's about 9%. 9.
Yeah, about 9%. There you go. Yeah. So as you might expect, an active week in all things crude, Mr. Nick. But yeah, let's get out here into the gold, and it has been an interesting week for gold as well. Not perhaps quite as rock'em sock'em, but still interesting. But up about 4% overall from an open interest perspective. And again, as you might expect, about half, a little more than half of that paper coming in the front month with about a little over 100,000 contracts. And out there, and the number one with a bullet was the ape 1200. So we checking that mystical, magical 1200 strike. Once again, capturing the imagination of the folks out there. Maybe some of the gold bugs running scared, trying to hedge, whatever it might be. That one was kind of number one with a bullet this week. Total of just a hair under, maybe it crossed it by the time you're looking at this, Nick, but just a hair under when I was looking at it earlier this morning, just a hair under 12,000 total contracts, 11,978 to be precise, including a good chunk, about half of that on Wednesday, with about 6,000 of those contracts coming up on Wednesday, about nearly half of that opening. So a decent opening paper on the 1200 strike there on Wednesday. Again, maybe some of the gold bugs scrambling to hedge, because they can't sell gold, right, Nick? They're gold bugs. They have to own it. So they got to hedge, right? So they buy those 1,200 puts in the front month, giving themselves a little bit of juice. And it's kind of interesting, Nick. This thing caught my eye. It probably caught yours as well. The number two shot actually was a fair ways out, all the way out to Dees. So some longer term paper actually tied with the 1210 puts in the front month. They did about 7,000, but also it was the Dees 1400s. Again, kind of weird paper this week. Who'd think the Dees 1,400 calls, so roughly 200 handles out of the money calls at the end of the year, we're lighting it up to the tune of about 7,000 contracts going up on there as well. I don't have it in front of me if that was how that broke down throughout the week, so maybe Mr. Nick, you have that. But in general, a little bit, kind of some surprising paper across the board, maybe in both products, opening on the double calls and WTI, not exactly what you'd expect given the pronounced sell-off this week. And now also a little bit of a sell-off out here in gold, and some opening on some, I think you can only term these optimistic or aggressive calls, the Dees 1400s, Nick, with good about number. When's the last time we saw Dees taking the number two spot in gold out here? That's a very rare occurrence. So, but that's kind of par for the last couple of weeks, where we've seen longer term paper lighting it up out here in gold. So some people out here are playing with a little bit longer term time horizon out here in the shiny stuff over the past few weeks at least. And of course, volatility settling off a little bit this week, but not too aggressive across the board. We'll see if we break aggressively through that 1,200 strike next week. We might see a little bit of a change to that scenario. Mr. Nick, anything catch your eye with those Dees 1400s, as well as the quick skew, and anything else out there in the shiny stuff this week?
Yeah, what I did once you mentioned that, I pulled up the June and the December of 2018, right? Because we always talk about those in the commodities, those mid-year and final part of the year contracts being of interest as well. And you also had me check on the 1,400 calls and when most of that action took place. Well, a lot of that action and a lot of the change in open interest took place on Tuesday. So a big portion of that trade took place early in the week. But then in the June of 2018, we also saw a big trade in the 1,500 calls on Tuesday as well. So you got the 1,400 in the Dees and then the 1,500 in the June of 2018. And that had a 2,800 that traded this week with an open interest change of about the same. So that's an opening. So, let's look at the last couple weeks. So we were trading 1258 2 weeks ago, and now we traded below 1,200. So, and you're looking at the front month vol, we're at 11%. That didn't come up this week on the trade down. It went down. So again, and I must sound like a broken record to people, but this is a broken record I like to play. You get down to the bottom part of a range that we've seen, right? So we talked about that when we were at 1120 or whatever it was. You just come off 60 handles, vol comes in, and you have the opportunity to buy some pretty reasonably priced 18-day, 45-day volatility and hedge it, and to see maybe we run back up to those levels that we were before. I mean, it doesn't seem like that tough of a trade, right? And if we look, and I'm going through and looking at the quick skew. The quick skew is on there now, third column of the volatility section, and you'll notice that in the 18-day, the April option, it says 2.5 capital P and 2.9 small c. So 2.5 capital P means that the puts are 2.5% rich to the money, and 2.9 small c means the calls are 2.5 to almost 3% cheap. So the capital means rich and the small means cheap. But last week, at the end of last week, the calls were 3% rich to the at the money. So we're seeing this is a pretty standard way that the gold works. It teeter-totters, right, with direction. And somebody in a previous show said, or a listener commented how that's kind of how the way this curve works. But if that's the case, then we have a chance. You have a couple things. You can get on and buy some cheap calls potentially, or you can buy some puts that aren't that expensive when it's all said and done. Because when you look down across the sheet, a lot of the puts are pretty much right near or very close to the at the money volatility. So buying puts hedged on this. I would say wait and see what happens from a follow through standpoint. But even so, it's 11% on an 18-day expiration that moved $24 this week. So I don't know about you, but that seems like you'd get your money back on that, right? If owning that straddle and owning that at the money.
Paying
straddle.
the rent, baby. It's paying the rent.
That rent got paid in cash. How about that? Wasn't even a cashier.
Yeah, you handed your landlord a wad of hundreds and said, "Leave me alone for a couple months."
Right. Don't ask me where I got it. Just take it. Right. So that sounds pretty good to me as a trade. So anyway.
Yeah, it's interesting, and I'm glad we could have you pull in some of those longer dated ones, because I wanted to check those. Like I said, I'm remote here, so my ability to check all the months and strikes is kind of limited by the devices I'm rocking out here and the connectivity. But yeah, I kind of suspected there may be some more lurking in those far back months. You kind of just confirmed my hypothesis there. So yeah, people are putting on some interesting plays right now out here in the shiny stuff. I think it's definitely worthy of note. If you're intrigued of that, like us, hit us up with some questions. Maybe you bought some of those double calls in WTI this week. Maybe you guys were kind of aggressively playing around the 1200s, or maybe that was you buying 1400 calls in Dees or beyond out here in gold. Hit us up. Maybe you have thoughts on those. You know how to do it. Easiest place to add options on Twitter or on StockTwits, questions@theoptionsinsider.com. And usually when we're streaming this live, you can ask us there live as well. Nick, we don't really have a chance for questions this week, but you mentioned a lot of cool stuff. By the way, I forgot to mention at the top of the show, you guys, as always, can follow us along. CMEgroup.com/TWIFO. Yes, I said TWIFO. It's been fixed. It's been fixed. Nick has a pull over there, and he managed to add the final F. We were working on that. It's been TWIO for so long. Now it is indeed TWIFO, which is the name of the show, which is nice. So CMEgroup.com/TWIFO this week in futures options. You too can play along. Look at all the cool strikes Nick and I are talking about. Talk about the vol. Look at the openings, the closings. Even Nick, you just said you added the quick skew now, right? Which is, if you guys haven't checked it out by now, it's a free tool, and he added the quick skew to it. I was giving him a hard time. I think you should keep that behind the wall, but hey, he wants to give it to you guys for free to play around with. Who am I to judge you, sir? So if you guys haven't played around with it by now, CMEgroup.com/TWIFO. Run, don't walk. Check it out while you're listening to the show, after, before. You should be using it all week, quite frankly. If you look at these products, it's pretty much the only place you can find this data, and it's free. You can't beat the price. Mr. Nick, that said, you added the quick skew, which is huge. I use that just in and of itself on a daily basis. Well, what else are you guys cooking up over there in the dev labs of Quick Strike, sir?
What do we got? Well, I mean, the big thing is the quick skew is good, and we're moving closer and closer to making that available to the public, just from outside of just seeing the number. But I think what we do limit on the TWIFO report is we only show where it is currently, as opposed to where it was earlier in the week. Let me double. Yes, so we don't. I'm not giving away the farm entirely, but it's meant to pique your interest, so you could watch how that thing changes. Now you can always go back and look at the past weeks on the time frame section to see how it ended up, but we're making it a little less convenient for you that way. But what's cooking? Well, let's see. We got a build coming out this weekend. I don't think there's a lot of noticeable stuff out there. I mean, I mentioned last week how we bumped up some of the open interest stuff to consolidate it. Some really good stuff, really good historicals, really good aggregate. So you can go out there and look at like the whole calendar year of strike-based open interests, especially for the crude. That makes for a really interesting. In fact, I'll tweet something out after the show. Makes for an interesting look at the market. So you could really get some nice aggregates, and And we're just kind of cleaning stuff up. So our whole goal this next quarter is to clean stuff up, consolidate, make it easier to use. The big thing, which I'm just really excited about, is our integration with CME Direct is really, really nice now. And the big news there is that starting April 1st, and that's not a joke, not an April Fool, you'll be able to talk back and forth between QuickStrike and CME Direct. So if you're a CME Direct user and you're a QuickStrike user, you'll be able to have a little bit of interaction there. And if you're a premium QuickStrike user, you'll even be able to access at some point in the near term your premium account right directly from CME Direct. So that will get you, all of the nice bells and whistles that aren't necessarily available in the free integrated version that's out there. So, just keep an eye. And if anybody has any quick SKU questions, shoot us an email. I'll always send you some charts I can explain to you. It's not super mystical, but at the same time, it's easy for us to keep track of and show you. So I think it's for me, it's been real telling throughout the course of a week to take a look and see how the quick SKU is changing, because you really see how the vol curves are wobbling around, and you don't have to look far. You don't have to look at a chart. You don't have to do anything. You just look at the numbers. So, so keep paying attention. And there's other stuff I can't say it until it comes out, because I think it's a double secret probation type thing. As soon as that's ready and available, I will let you know, and you can take a look and see what you think.
Check it out, listeners. I mean it. The quick SKU alone is worth the price of admission, especially if you're coming in cmegroup.com/TWIFO, because it's free. There is no price of admission. So check it out over there. I use that all the time because literally nobody else does that. Everyone else gives you one SKU number. No one tells you how it changes put wing and call wing. Nick and his team are doing that over there. Check it out, cmegroup.com/TWIFO. And unfortunately, no live stream again next week because it's conference season here. But I am going to the Futures Industry Association conference next week. So no promises. But I'll see if I could, in order to compensate you for the loss of the live stream, I'll see if I can dig up maybe a few interesting chats with some people down at the FIA show for you guys and put them into the show feeds. You guys can get them here who subscribe to TWIFO. On behalf of Nick and our friends over there at CME, and indeed myself, I want to thank all of you out in the listening audience for downloading, streaming, and subscribing to the show and putting up with our ambient noise here this week. Probably some more of that next week. But then we'll back to the studio and the nice live stream. So we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.